Hello again, guys. Right, traders, you can probably hear the rain on my office roof. So uh, instead of going for a lovely long walk, I've decided to make a video for you and see if we can work out the subtleties of this particular gold chart here. So just before I start, if you follow my Twitter feed, look at gold. In fact, the rain is so hard I can hardly hear myself think, so hopefully it's not during the video. Anyway, if you look at my various bits of my Twitter and YouTube account, you will see I like to trade the ADR on gold. Almost every day we get a range of, obviously the range now has, this daily range has exploded because of this big move outside of the Asian range. But prior to that, this actually was 724 pips or 72.4 pips. The average range is more often than not 90 pips. I haven't even looked at that one, but it looks definitely more than 70. That one's 80 pips. So the point being, and we'll look at a couple more as well. The point being, although there is a lot of volatility in the market with BTC, so I haven't checked, this is daily line boxes indicator. It's brilliant. You can set it on any time frame. That was 152. That one will look small because of the other big ranges, but that's 95. So as you can see, that one's got to be pretty similar, about 90. So as you can see, 87, 90, whatever. It's a pretty good, even I've rarely seen it below 60. So, you've got a brilliant, that's 60 pips. We only need 5 or 6 to make a living, a daily pip count. So that's a brilliant thing. Anyway, that was not the point of this video. The point of this video was to talk about this particular situation we're in now. Massive move down, everything's screaming short. And I've got an alert set there, and I had an alert set high up here as well for a potential break to the long side, but I've just cleaned up my alerts, so deleted them all. So the reason I've put it quite low down there is we're on the 15-minute chart. First off, I should do this. We can clearly see when I started work again after a quick cat nap, after trading the Asian range, but that's a different subject. We can see this looks like it should go down. Now, I also accept that this wick in this massive downtrend with this level broken looks like it wants to be broken. So it's very, very, very tempting to jump in this trade. And that's the point of this video. Be very careful when assuming that price will go down. You could get a reversal up to this trend line easily. And you will see as I go down the lower time frames why, and this is a really, really important point, the point I'm making the video actually, because although I do say it on Twitter often, be prepared for the three swing pullback. This is the area of sellers that tried to be buyers, part of the downtrend, swing 1, 2, 3, 4, swing 1, 2, 3, 4. If you want to use the bigger swings, that would be on the higher time frames, and all of these relate to 3 candle reversals on the higher time frames as well. So expect, much like this situation here, it didn't just pull back and then collapse. It's gone up, back, up, back, up, back, up, back, and then collapsed. That would be a 3 swing reversal on the 15-minute time frame probably, but I'm not going to confuse things there. Do the analysis, do the chart time yourself. But the point being, I don't want to get faked into a short trade here before the third swing. So, we are now at 10 o'clock. That's the sideways time of the market. It could collapse. Yes, of course it could collapse. But be prepared for, and that's why I draw these descending trend lines and ascending trend lines. Be prepared for that last swan song, whatever you want to call it, the trap, the bear trap, bull trap, call it what you like. You're going to get a lot of pain if you're not careful. So, and also we can see clearly, although this says down, look at that. There is no, the slope is up, simple as that. So in terms of momentum, so just be careful. That's the point of this. And the way we could enter this with care, that's another worthwhile part of this video, is let it push down. And I no idea what that alert was for, but it was an alert. Let it push down, and then let it pull back, and then consider potentially entering this. When these then will look like a pullback and a break and close with more momentum through here, possibly down at this point here. Then should be red and everything should look good to go. So don't be tempted just to hit it here, because you could feel a world of pain. Obviously this is keeping us out of potential shorts at the moment, which is brilliant. And as we look through the time frames, I would expect that's bearish. That's expect to get that filled, but never assume anything. This is telling us that shorts are probably on the cards. This is why I'm making this video as well, because I'm still expecting to get pain. The meat and potatoes of the move is up here. This is where most traders get greedy and assume price will just continue down, and the algos know it, the big players know it, and you now know to expect accumulation, distribution, manipulation is probably a better one word description of this area here. Like I say, I've set my alert a fair bit lower than the price, because I don't want to be tempted to get involved before sort of this situation here. If it breaks down and then pulls back, and we've got a 3-candle reversal, then we've got the reversal 3-candle reversal, and then potentially that situation there. So be careful, guys, or as I'm expecting, potentially a pullback to here, and then a mess around maybe till 1:30 the American Open, or even 2:30 the stock market open, and then maybe it will go down, or who knows, it might have to break all, well, if it goes up, it's got to break all of these sellers, so it's got to get way up here. But we trade, I often say, don't trade into sellers. We can trade to test. So pop up above the Asian low, pull back to test it, then up to test this, looking for liquidity, and then break through it, then pull back, then continue. So, it's hard to take this in black and white, although it is the most mechanical method that I have devised for myself. But you have to have an open mind to all potential moves, which is why the momentum is such a useful tool, additional tool to what I used to do, which was watching every 3-candle reversal on every time frame, right from the, where we are, hourly, 30-minute, even the 4-hourly, or the daily, whatever you want to look at. We can see the daily is below the daily open by this TMT, which is why it's on the charts, really. So we know roughly what direction we should be going in, but mainly this thing, and I digress again, is used to look at it when it's a full red bar with no wick. Then we're looking for the overextended ADR possible trade. So, and one last note to make to everyone, and I don't mention this enough, and I like to. Look, I know you stock traders can't trade, stocks on, with leverage and stuff like that, up and down, whatever. But there are some super stock MT4 accounts there. A lot of people don't like MT4, but these indicators are worth their weight in gold, in my opinion. So it's worth just opening a demo account to get some stocks. It's worth opening a demo account to be able to use the fantastic RSI dashboard if you can get involved in in some of the stocks as well. I mean, there's probably one of the Think Markets, I think it's called, has got 100 odd or 200 odd stocks on there. The RSI dash works perfectly with them. So in my opinion, a free, MT4 is free. All these indicators are free. Why wouldn't you get a tool that is so powerful that is free? Not a penny, not a cent. Just a couple of hours of your work watching YouTube videos will get you a tool that could make you thousands in one trade. Why wouldn't you? MT4, everyone likes to laugh at it, but holy shamoly, this dashboard is worth its weight in cryptocurrencies. That was a bad analogy. Sorry about that, guys. Anyway, have a great day. It's Monday, and thanks for watching.